Zervos down 8%, I think Mike just said, from June 8th high. Is that a buying opportunity?
I don't know if it's a buying opportunity, but I would take you 8 days before that, Wilf, and just say that on June 1st, we were basically here at 3,000 on the S&P. So for the month of June, we're basically unchanged. We had a heck of a run-up in those first 8 or 9 trading days, or 8 or 9 days of June, about 6 trading days, 7 trading days. And I think it was a breakneck pace. I think people got very excited about the reopening, about the news being much better. And the reality is it's going to be a bit of a slower slog. So I look at the month of June as really kind of not that exciting in the end. And when you take it from that 3240 level in S&Ps down to here, 3,000, you go, oh my God, that's a big sell-off. But grand scheme of things, if we never went up there and we just traded around 3,000 back and forth all day, 1 or 2%, we probably wouldn't be having this conversation. It'd just be sort of sitting around for the last month, which is largely what we did.
Why is this not a dip buyer's opportunity, David? Isn't the story always that the Fed's going to have your back, that Powell's going to be in, that the liquidity is going to keep flowing? I mean, that's been one of your messages. It's what we hear all day on CNBC.
I'm a big fan of that, Sarah, and I'm certainly interested in owning the upside, and we have been. And since April 3rd, we've kind of jumped back in with a new version of our risk parity trades that I'm really happy about. That involves investment grade credit and stocks. And that's done really well. We're not fully 100% in the trade, but we're about 50% in the trade, and it's been an extremely good run. I'm looking for material pullbacks, and I definitely would like to add more to that trade in particular. But I don't think you need to be that hasty. If you've been participating in this and you didn't have a lot of negative P&L going into the March period, you weathered that storm either in risk parity or in other more insured bets. I think you can be patient here if you're up and you're having a good year. So I'm not negative. I'm certainly not as negative as a lot of people have become on the virus and the reopenings and what's happening in Florida and Texas. I think what's happening on the young folks is a positive more than a negative. That it's not hitting the elderly and the death rates are not up. But I understand the markets, and the markets want to churn a little bit. And I will say, Sarah, one other thing. And you guys have been talking about this all day with the bank stocks. There was a pretty big battle between Lael Brainerd and Governor Randy Quarles, or Vice Chair Randy Quarles. And Brainerd is someone who will probably be in the next administration if Biden wins. And I think bank stocks are looking a little more forward to what might be the regulatory outlook for them in a world that doesn't involve a Trump presidency, and it might not be that good. So I think part of today was maybe some of that as well. So I don't want to get too hung up on the virus. I think there's some financials weakness that is what the Fed did and what the inner battles are at the Fed on regulation and deregulation. And they're still pretty fierce. They're pretty interested in backstopping the economy. We know that. They're all on board. But when it comes to bank regulation, they're definitely not all on the same page.
Liz Young, for long-term investors that can try and look past the short-term volatility, are equities in the U.S. still the place to be?
If we're comparing them to emerging markets and parts of Europe, I think for the long term, yes, equities in the U.S. probably do better coming out of this crisis. We came into this in a much stronger place than a lot of other regions around the world. One of the things that I think is important to note about this June period is that I don't think it's a scientific surprise that we had an uptick in cases as we started to reopen and we gathered in bigger groups and we sent people back out into the economy. And the market seemed to actually be pretty comfortable with an uptick in cases. What it stopped being comfortable with was an uptick in restrictions, because that sent a signal that maybe this reopening process isn't going to be uninterrupted. I do think that we'll get our arms around this and we won't end up in this broad kind of shutdown again. But we're probably going to chop through summer. And this is the definition of a choppy market. So you asked the question before about, is this a time to enter? Is this when you buy the dip? I would imagine people that are watching the market on a daily basis have already entered the market over the last few months. So a day like today and a day like we had earlier this week is an opportunity to add to those positions that over the long term you think are going to do well in a reopening and in a recovery. But I don't know that this is something that I think you would throw all your new money into, because we're probably going to see more chop from here.
Let's get Bob Pisani now for a summary of all of that market action that we saw over the course of this last 5 trading days. Bob.
Lousy close, Wilf. No way, two ways about it. Closed at the lows for the week, down 2.4%. But once again, there's a very wide dispersion in the returns. We keep talking about mega cap outperforming. Even with the downtrend today, that is still the case. So take a look at the big Dow movers for the week here. Apple and Microsoft, one of the only two names on the upside. They eked out another gain. Boeing, rough week. American Express was down almost 8%. And the banks, all of them down 3, 4, 5, even 6 or 7% for the week. My key concern is that a number of big sectors are in downtrends now, and I'm talking about industrials in particular and a lot of consumer names. So if you look at Raytheon, they keep talking about these inverted V's that have been going on. Raytheon went from 60 to 75 and then essentially back down to 60. You're looking at a weekly here, but you can see ending right near $60. ExxonMobil, the energy sector, same situation. Exxon was 44 a month ago. It went to 56, and now it's back to 44. And same with the consumer names. McDonald's, 180 to 200, back to 180. That's a problem with these stocks in downtrends. Guys, back to you.
Bob Pisani, thanks very much.
All right, Bob, thank you.
Go ahead, Sarah.